Hey, what's happening, everybody? Welcome to my live. I do every single week for the Redfin updates. And I'm just bringing on Instagram now. Apologize for the delay. Get started in a second. Okay, hope everybody can hear me. So, yeah, this is my weekly update. Welcome to Ohio Real Estate. My name is Jason Ferrier. I am a real estate agent. I'm also an investor, and I work for a brokerage called Kiger Realty here in the Licking County area. So, the purpose of this live, I do this every single week, and I do it once the Redfin data is released. They usually release their updates on Thursdays, sometimes like Wednesday nights late, but oftentimes on Thursday morning. And it just gives us like a sense of what's happening in the local and national real estate market. And it's a great gauge because they update it frequently, right? Every week they're updating the previous 4 rolling weeks. And that's what we're going to look at right now. And so let's just get into it. So here is the Redfin update. I'm just going to share my screen. All right. So this one, I thought this was pretty funny because they actually name the Super Bowl as one of the reasons why pending sales are down so much. That there were so many people watching the Super Bowl. I mean, I know a lot of people watch the Super Bowl, but like that happens every single year. So and last week they were blaming the harsh winter weather. And I know there are areas of the country that have experienced like massive amounts of bad weather. Like in California, they had a bunch of rain. That can certainly keep people from buying houses. There's no doubt. But every year it's cold and every year there's a Super Bowl. So I don't know. It's kind of annoying that they keep referencing things that are like, well, the only thing you have to tell us is that there's a Super Bowl and that there was winter weather. Strange, but regardless, let's jump into the data. So the title of this week's Redfin update is Housing Market Update, Home Prices and Mortgage Rates Rise, Pushing Would-Be Buyers. Pushing would-be buyers to the sideline. Home prices posted their biggest annual increase in 15 months, and mortgage rates rose this week. High housing costs, along with seasonal factors like the Super Bowl, pushed down pending sales. Okay. Yeah. So they're saying that the Super Bowl pushed down pending sales. Okay. Along with high housing costs. No kidding, right? The median U.S. home price, the median U.S. home sale price rose 6.1% year over year during the 4 weeks ending February 11th, the biggest increase since October of 2022. Mortgage rates are rising too, driven by high prices to drive costs up. Daily average rates are sitting above 7%, up from 6.6% at the beginning of the month. So this points to the fact that not only have mortgage rates increased, they were below 7% for a few weeks. Now they're back above 7%. I think I checked this morning and it was like 7.1 after the CPI print. The 10-year treasury spiked and obviously mortgage rates spiked too. So that's above 7% now. But also the median sale price rose 6.1% year over year. And a lot of people have been predicting that home prices were going to like plummet this winter and, early in the year, January, February. So far, that hasn't happened. In fact, home buying season, the springtime, it's right around the corner, or I guess it's kind of already here. And so will prices, crash? It doesn't seem like that's the trajectory. Seems like they're going to continue to increase. They're up 6.1% year over year, the biggest increase since October of 2022. High costs are one factor keeping would-be home buyers on the sideline. Pending home sales are down 7.3% year over year, one of the biggest declines in over 4 months. And Redfin's Home Buyer Demand Index, a seasonally adjusted measure of requests for tours and other home buying services from Redfin agents, is down 18%. In storms, in addition to high housing costs, several seasonal factors kept House hunters at home this past week, extreme storms in Southern California, the Lunar New Year, and the Super Bowl, none of which are accounted for in the demand index's seasonal adjustment. Sellers are a bit more active than buyers, with new listings up 8% year over year, as some homeowners take advantage of rising prices. So the rest of the article doesn't really give us a ton of data. I'm going to jump in right into the data now. They had an agent basically say, there's like a quote in here from somebody in Michigan saying, hey, they're advising sellers to list your house now. Don't wait. Whatever. Right. Like, as an agent, like that's ridiculous. Like, I don't think you should tell a seller, hurry up and list your house. It's like, hey, if it's the right time for them to list the house, list it. Give them some guidance on the market. But like, if they don't list it now and they wait a couple weeks or a month or something, is it going to kill them? Probably not. It may even be better. So I don't know. I don't like the hey, hurry up and list your house now. Because I need business, right? That's just completely lame. All right. Leading indicators. Let's look at these. This part gets really strange, because what you're going to see is that pending sales are actually down. We know that that's down like 7 point some percent. We know the price is up. We know mortgage rates are up and new listings are up. The weird part is active listings are still down. So the number of active listings, houses for sale, is still down compared to last year nationally. But new listings are rising and pending sales are dropping. So like less houses being sold, more new listings hitting the market, yet overall we have less inventory. So it's like, okay, well, how's that possible? So we'll have to look at that here in a second. I'll give you some ideas on why that's happening. All right. So we know daily average 30-year fixed mortgage, 7.09% in February, up from 6.75% a week earlier. That's year over year change. Last year, it was 6.54%. Weekly average 30-year fixed mortgage rate, 6.64%. That's just a weekly average. Mortgage purchase applications down 3% from a week earlier, up 1% from a month earlier as of February 9th. Down 12% year over year. So mortgage applications are actually down 12% year over year. Can it really get any worse if you're in the mortgage business? I don't know if it can. Maybe we're at the bottom. Hopefully we are. And the mortgage purchase applications, they're down 3% from a week earlier, but up 1% from a month earlier. So not a whole lot of progress there. Redfin home buyer demand index, this is their own algorithm on, home buyers and how much demand they have according to, what they're doing with Redfin agents out there. Down about 6% from a week earlier. So home buyer demand index is down 18% from a year earlier. So obviously a big change and a drop in demand according to Redfin. Google searches for homes essentially unchanged from a month earlier, down 11% year over year. And touring activity, people actually going out and seeing homes, that's up 14% from the start of the year. At this time last year, it was up 10% from the start of the year. So I guess it's up 4%. Is that how we read that? Year over year. Okay. Key housing market data. This is where it gets really interesting. Median sale price. Here we go. 362,725. That's a year over year change of 6.1%. Biggest increase since October of 22. So when you'll see the chart here in a second, you'll see that the median sale price is not crashing. And the median asking price is not crashing. That's actually up. So either that's more expensive houses hitting the market, which I think is the case. I think overall there are more expensive houses hitting the market than affordable houses, and that's driving the median asking price up. It doesn't really mean that people are asking more for their homes than they normally would. It just means that the median asking price is up year over year. And it could be because houses that are being listed are more expensive homes. And I think you'll see that in the data. Median monthly mortgage payment, $2,600, up 9% from last year. Pending sales down 7.3%. Yeah. So the number of sales that are actually pending, and then obviously eventually they'll close and sell, that's down 7%. But New listings are up 8%. So you have more houses than last year hitting the market. You have less pending sales. And then now this next stat, active listings are down 2.5%. I will say, I think the active listings, I believe what we'll see is that it's trending up um, nationally. And then at the end of this video, I always look at Columbus. So I forgot to say that at the beginning. So every live I do on Redfin, I talk about the national market, and then I look at Columbus and the Central Ohio market. So yeah, active listings, 751,000 active listings. A lot of people thought we would have 1 million listings by the end of last year. In fact, there's a guy on YouTube. His name's Travis, and a pretty entertaining guy. He does a lot of content on YouTube for real estate, and he talks about how he was like calling the fact that there was going to be 1 million listings at the end of 2023, and we weren't close, and now we're still not close. There's a lot of people that are just hoping, wishing, wanting, and praying for a housing crash. It's like, I don't, a lot of people who seem like are hoping for it aren't even in the real estate business or really even wanting to buy a house. They just kind of want doom, right? Doom for everybody. Maybe, who knows why, but they do. So it's funny because the media, the active listings aren't skyrocketing. It's how it is. Months of supply, 4.2%. I'm sorry, 4.2 months of supply. That's up slightly. 4 to 5 months is a balanced market. So I guess it's balanced now. Do you think it's a balanced market? Please comment. Comment below in the comments there and tell me, do you think it's a balanced market? Because it doesn't feel like it. Still feels like sellers have control. And I think there's just more inventory hitting the market that is maybe overpriced. It could be inventory that is in the upper end of the price ranges, like well over the median. So in Columbus, the median here is like 310. So maybe these are houses in Columbus that are being listed at like 800 grand. Those don't move. I can tell you where I live in Granville, Ohio, in Licking County outside of Columbus. And there are some houses in Granville that are like, I mean, they're amazing, renovated, turn of the 20th century houses, and they're sitting like some have been sitting over 100 days, and they're priced 800 900 million dollars. Because interest rates are where they are right now, a lot of people aren't looking to buy more expensive houses if they're already in a house, primarily because why trade in your low interest rate you probably have now, 3 4 5%, for a 7% interest rate? Why do that? Obviously, it doesn't make any sense in a lot of situations. So I think those more expensive houses are hitting the market, and that's driving the months of supply up because people aren't buying them. It's not because there's a ton of inventory hitting the market that nobody wants, that's like affordable, and good, and medium price houses. All right, share of homes off the market in 2 weeks, 35.3%, up from 34%. Median days on market, 50, down 2 days. Share of homes sold above list price, up from 20%. It's up 2.5%. Share of homes with a price drop is up slightly. And average sale to list ratio is actually up to 98.2. So the average sale to list ratio, the share of homes sold above list price, median days on market, and share of homes off market in 2 weeks is showing signs that the demand is still there, right? I mean, if the average sale to list ratio is actually up versus the last report, it means that 98.2% of all houses are, I'm sorry, 98%, 98.2%. That's what sellers are getting for their houses. So if they're listing a house at 100 grand, generally speaking, they're getting $98,200. There's not a huge discount there. I think that's like an historical norm. It's definitely not over asking, right? We're not seeing the 105% of asking. That's good. But it's not like huge discounts are happening. All right. This is where they go into some of the cities that have the biggest changes. So median sale price, Newark, New Jersey, 14% increase in median sale price. New Brunswick, New Jersey, Miami, Anaheim, and Warren, Michigan. These are almost identical to what we saw in the last report. I mean, these cities, so like Miami, Anaheim, Warren, New Brunswick, and Newark, New Jersey, all those continue to be on the list of places where the median price is increasing the most year over year. Metros with the biggest year over year decline. Absolutely no surprise here. If you live in Texas or you know somebody that lives in Texas, it looks like their prices and their market are just, they're just getting destroyed. I mean, every single week, Texas leads this list on declining metros for pricing. I think a lot of it has to do with new construction. There's a lot of new construction in Texas, and I think that's driving, more supply overall, and maybe the new home builders discounting prices. Um, but yeah, Austin's definitely taken a beating, as is most of the other areas in Texas. Pending sales, San Jose, Cleveland, Believeland, and San Francisco, 1.9%. I won't hit that too much. New listings, warehouses hitting the market the most: Dallas, Jacksonville, Fort Lauderdale, Miami, Tampa. Geez. So a lot of Florida and Texas activity. Where are they down the most? Where are new listings down? Milwaukee, Atlanta, Chicago, Portland, Nashville. Something you have to do if you are looking to find out, hey, what's happening in your market? Look at the inventory. Yeah, are new listings dropping? Are active listings dropping? Do you have less inventory in the price range you're looking at than you did maybe last year or last month? And if you see that number declining, you can probably guess that prices are going to stay sticky. However, if you see active inventory um, shooting up and tons of inventory hitting the market, then you can probably assume that prices may start to change and come down because there's more supply. All right, let's look at these charts. Median sale price. This is national. You can see right here, 362,725, up 6%. I would be surprised, but it may happen that median sale price actually keeps climbing and eclipses the previous years. It would just be something else. I mean, overall, I think nationally prices will increase anywhere from 3 to 5% nationally. That was like my call that I made in December. And locally here in Columbus, I think it's more like 5 to 10%. If interest rates drop substantially, or maybe even a point, then certainly this could eclipse next or last year and the year before. And so, yeah, it's unfortunate if you're out there looking for a house, maybe it's your first time buying a house. There's just not a lot of relief on pricing yet. It's just not happening. A lot of people thought maybe this line would come down, right? Like the line would go woo way down underneath all these other years, but hasn't happened. Didn't happen last year. We ended up 4.5%, I think, according to Redfin last year, and now we're already up 6%. So hopefully there's some relief and this thing cuts underneath these previous years. Median asking price way higher than it was the last couple years, no doubt. Housing payments are up, which is, and I did read an article today that said that people are just getting used to high rates. Like they're just becoming accustomed to the fact that rates are going to sit in the sixes and maybe the sevens, and that's just how it is. So if you want a house, you just have to deal with it. I mean, that's okay. That makes sense. Consumers get used to prices. I think that's how it works sometimes. Pending sales down 7%. I mean, look, you can see compared to the previous years, pending sales are just horrible, horrible, right? If you're in the mortgage business, title business, you got to be feeling it. Real estate business, if you're a real estate agent like me, you're feeling it, right? New listings of homes up 8% year over year. So new listings are up from last year, certainly. And they're starting to climb even faster, but we know that active listings, which we'll probably look at next, are down. I was wrong. I thought it was maybe a trajectory upwards, but it's not. Active listings is actually not headed up. It's down year over year, and now it's actually looks like the trajectory is low. That's interesting. It's really interesting that active listings aren't higher than they are. We'll have to see what happens in the spring, because a lot of people list their house in the spring. So I wonder if inventory will shoot up. 4.2 months of supply, 35% of pending sales under contract within 2 weeks. more than last year, but certainly down compared to the previous years before that in 22 and 21. I mean, look, this chart's kind of interesting. Look at 22% of homes sold above final list price. That's more than last year. But man, look at 2022. I mean, we were like at 40, 38% of homes sold above list price. Wow. Now we're at 22%. This one always stumps people. 5.6% of homes or listings had price drops. So people look at that and go, oh, that means people are discounting their homes. Well, they are, but I guarantee you a lot of that are homes that maybe were priced too high to begin with. People, got over their skis on that. And then, maybe houses that are just, junk or need a ton of work. Like right now, what I'm seeing are a lot of homes on the market that are sitting that need a lot of work. And people, generally speaking, because rates are so high, it's difficult to secure the financing to do the rehab on the property. And so sometimes that can drive people to lower their price on properties that need a ton of work. Average home sold for 98%, 98.2% of final list price. So yeah, it's definitely more than last year. But yeah, way down compared to the previous years before that. Look at 22. Yeah, over 100%, right? And then it just shot up. I mean, at one point in 2022, we were 102%. The average home sold at 102% of the final list price. Wow, completely unhealthy. Now 98.2, probably more like it's supposed to be. Slight discount. Some people are getting discounts. Some people are negotiating. Some people aren't. Demand index. This thing is like, it's like their own algorithm type deal where they're like, hey, I'm going to put together these data points and come out with my demand. I don't know how if it's worth even looking at this, but it's down 18% year over year. I mean, it's down 18%, but people are still purchasing houses. I know that firsthand. And the median sale price hasn't crashed. So the demand index, I don't know that it really amounts to much. Okay, so that is the national update. Now let's go to the local update. By the way, I say this every week, but I'll keep saying it. You can go to this data center at Redfin. And I think all you have to, like, if you just, the address, I'll put in my description, but if you literally just Google Redfin weekly housing data, it'll bring you to this page. You can come down here and actually look at weekly data by metro or county. It's pretty cool. So right now I have metro put in, and I have the Columbus, Ohio area, metro area put in. And then you can look at the duration, 4 weeks or a 12-week rolling average. I use 4 weeks because that's what we use on the national charts. And then you can actually select, like, the years to bring in different years and kind of clean up the chart. So right now I have 2023 and 2024 checked. And so that's what we're looking at. All right, let's start at pricing though. Median sale price for Columbus. Oops. Gotta drop this down. Columbus. That's 21, 22. Call from my insurance guy. I'll decline that for right now. Talk insurance later. All right. So Columbus, we've got on median sale price, I think it went up slightly, or it stayed the same actually. $310,000. So here in the Columbus metro area, you got $310,000 is the median sale price. Last report, $310,000. It started the year at 315, dropped down to 306. Now it's at 310, 6 and 1/2 dozen the other, about the same price. But last year, look at where this pricing went. We set a record last year, 341 in June. Then we hit it again in July. I believe this was the record for Columbus in median sale price, like a historical record. Now, what will pricing do this year? Well, I'm just going to make the call. I don't know that it's going to eclipse 2023. I think it's possible that it does, depending on interest rates, but I don't think it will. I think it's probably going to cut through this thing at some point, end up down, or I'm sorry, go underneath 2023, and then actually end. I do think we'll end up though. I think it'll be a more of a steady climb and not such a, straight upward trajectory. So hopefully there's some relief here for some buyers. We maintain some type of normalcy in the rate of increase of prices. Let's look at new listings. So new listings for Columbus up 1.8%. So nationally, we were up 7.3%, 7.2%. Now in Columbus, new listings were only up 1.8%. And that's not going to do it. I mean, that's not going to help us very much. Just not a lot of new listings hitting the market. Active listings. So how many units are actually or properties available to buy right now? And that is up as well, 1.38%. So there's 3,980 listings right now. Just not a lot. Just not a lot of inventory, folks. I mean, if you bring this in, it is should be more than 22 and 21, though. I'm going to bring those years in just to look and see. It's about the same. Wow, look at that. A lot more than 22, but about the same as 21 and 23. So, I mean, oops, I bring 23. That's surprising. I mean, I would think, we have much more inventory than we did the last few years, but it really doesn't look like that. We actually have about the same, just a little more than last year. It's just not going to do it. We need a lot more supply. And I can tell you this, the new building in Columbus, in the Columbus area, I've been really studying the new builds. There's just no inventory there either. I mean, I'm not sure why we're not building more houses. There's a lot of farmland and stuff. Maybe it's zoning. Maybe it's, I don't know. The demand, people don't think that the demand is here. But man, if we don't increase supply quickly, we're going to have major issues as Intel gets rolling, unless the plug gets pulled completely and Intel doesn't build their factory, which would, maybe be better for the locals with housing. I mean, it would actually help us. But there's just no inventory, and that makes it very difficult. And the inventory that's out there inside the metro areas is often, it's older inventory, 1900, 1920, 1930, 40, 50 houses, and those need work. So it's, I wish there was more new building, affordable new building in Columbus. And there's just not a lot of it. All right, let's look at the months of supply. Man, months of supply down 0.2% year over year. So we have less months of supply than we did on the last report. It's kind of following last year's trend. Hopefully we get more months of supply, but again, unless we get a lot more new listings, I don't think we're going to see that. Let's look at homes sold. This is the number of actual sales, closed transactions, and it is up. So celebrate if you're in the real estate industry. Up 6.5%. Look at that. Woohoo! That's great, but it's still it's very anemic still, right? We don't have that. We don't have a great volume of closed deals. We just don't. By the way, that's why if you're in the real estate industry, you got to own rental properties. Well, you actually don't have to, but you better have a second gig. So owning rental properties, that steady income can help you work through when you get years like this. I know a lot of mortgage professionals, a lot of real estate professionals that have, quit, have said, no, I'm done. I'm out of the business. There's just no There's no money in it right now. I can't pay my bills. And I would encourage you to stick it out. If you're in the business, stick it out, because when all this is done, when the volume starts to come back, you're going to be here and you'll be able to benefit from it. Yeah. So it's dismal right now in the real estate business. Oh, by the way, if you're a homeowner or a seller or a home buyer or whatever, and you're out there looking at real estate, realize that agents right now need business. I mean, they do, right? So negotiate with them. I mean, if I was buying a house right now and I was talking to agents and I got an agent that told me I charge this much in commission and that's just how it is, and maybe that's so, I'd push back, because there are, I mean, realtor services are worth something. There's no doubt. We have a hard job to do. We have a lot of upfront costs, no doubt. But when agents are out there and they need business, well, maybe you can get a discount if you're listing your house. And so that's all, I'll leave it at that. Yeah. So volume is bad. Let me look at one more stat here. Price drops. Did we already look at this? No, we didn't. Okay, so price drops. These are the people that are actually dropping their price on their houses. Not a lot of love here either, right? We're down 0.2% year over year in the number of people dropping their prices. Pending sales. These are the sales that are actually your house is in contract. That's down. What's that? Down 2.3% here in Columbus. Not a lot of news there. Dismal, just like it is on the home sale front, no doubt. Okay, well, that's my Redfin update. I did the national one. I did the Columbus one. Kind of clunky, I know. I'll get better at these, I promise. And if you are in Columbus, if you're in Central Ohio and you need help with real estate, or if you just want to talk real estate, give me a call anytime. My info will be in the description below. And thanks for joining me. I'll do this again next week, every week when Redfin puts out these updates. I hope this helps. I hope this gives you some insight into the local market. And thank you for your time today. Have a good weekend. See you on the next video.